Ever wonder when Elon Musk, the CEO of Tesla, plans to buy back Tesla stock? Ever since Musk sold Tesla shares, a lot of investors had been waiting impatiently for news. You would most likely not want to miss this. It should be mentioned that Musk sold off a sizable portion of his Tesla stock in April in anticipation of a proposed takeover of Twitter. According to regulatory documents, the Tesla CEO also sold an additional 7,924,107 Tesla shares in early August for a total estimated value of $6.9 billion. Musk did respond yes when a Twitter user inquired if he was done selling. It's crucial to prevent an emergency Tesla stock sale in the hopefully remote event that Twitter compels this deal to conclude and some equity partners fail to materialize. It happened in June. Since then, Tesla shareholders have been expecting the CEO to begin repurchasing stock. It should be mentioned that when Musk began selling Tesla shares in order to pursue the Twitter deal, the majority of investors expressed anxiety, while some were disturbed. Many were quick to note that Musk is no longer fully focused on Tesla, which is undoubtedly bad news for the business. On the one hand, a lot of people are hopeful that Tesla will perform well enough to encourage Musk to repurchase Tesla shares once the EV company's investment rating is upgraded, a move that some believe has been long overdue. After announcing a robust first quarter with a strong financial balance sheet, particularly in terms of free cash flow and negotiating challenging macro conditions in the industry, Tesla came closer to S&P Global's investment grade rating in April. According to S&P Global Ratings, notwithstanding supply delays, Tesla Incorporated's first quarter performance, which ended on March 31, 2022, showed strong execution and prospects for strong free cash flow in 2022. During Tesla's Q1 2022 earnings call, CEO Elon Musk and other executives described the automaker's best performance in its brief but illustrious history, according to a bulletin from the organization. Tesla's revenue exceeded $18.7 billion, compared to the average expectation of $17.8 billion. Additionally, it posted a nearly $1 beat at $3.22 per share, beating EPS projections of $2.27. Tesla's ability to maneuver around global supply chain challenges and chip shortages, two issues that have plagued numerous industries, with the automotive industry being among the hardest hit, may have been the most impressive figure of the company's quarterly breakdown on their shareholder presentation. According to Tesla, the supply chain continues to present difficulties, which our team has been resolving for more than a year. Apart from the scarcity of chips, the recent COVID-19 breakouts have adversely affected our production operations and supply chain. In addition, the cost of certain raw materials has multiplied recently. Our cost structure has been impacted by inflation, which has led to changes in our product prices, even though we're still committed to finding ways to cut our manufacturing expenses. Notwithstanding the difficulties, Tesla's car division exceeded forecasts, setting a new company record with 310,048 deliveries in the first quarter. Expansion in average selling price, expansion in other areas of Tesla's company, and growth in vehicle deliveries were its main sources of income. S&P is almost ready to upgrade the company's stock to an investment-grade rating based on its performance in Q1. Although the company upgraded Tesla to a BB+ rating in October, the company still has a competitive advantage because the industry is still growing. By S&P Global standards, Tesla needs to move up one notch from BB+ to BBB in order to be deemed investment grade. In comparison to its rivals, Tesla looks to be in a very strong position right now to increase the capacity of its cells and finish ramping up production to meet demand. After delivering 936,000 vehicles in 2021 and more than 310,000 in the first quarter of 2022, S&P Global Ratings stated, "In particular, we believe the maker of electric vehicles, EVs, is on track to increase its annual vehicle deliveries toward our forecast of roughly 1.5 million over the next 12 months. We recently boosted our EV penetration to achieve 15% to 25% of the global fleet by 2025. which could support Tesla's capacity to increase sales of its vehicles, even while competition is growing with the launch of multiple new EV models. However, investors had been anticipating that Tesla would be lifted out of junk status as early as the next year, which would be a credit landmark milestone for a business that has grown to the top of the electric vehicle market in less than 20 years. The good news is that the company's consistent revenue stream may allow for an earlier arrival of this rise. By the end of June, Tesla had around $19 billion in cash, well as more than $10. Levington declared, Tesla is still generating a huge amount of cash. At some point, ratings companies will have to act, and I wouldn't be surprised to see an upgrade to investment grade happen before year-end. For certain huge funds, which frequently have a strategy to not participate in firms that have anything less than an investment grade rating, often referred to as blue chips, this might not be a major concern, but it is for Tesla shareholders and the typical investor. This has kept a few big funds from making Tesla investments. Consequently, a lower proportion of Tesla's shares were owned by major institutional investors than those of its competitors with astronomically high valuations, such as Apple and Amazon. The disparity between Tesla's bond rating and stock market valuation illustrates how slowly S&P Global Ratings and Moody Investor Service are upgrading relatively new businesses like Tesla, whose first vehicles were introduced in 2008. Tesla's stock has surged since 2020, and the firm made history in October by becoming the first junk-rated corporation to have a market worth exceeding $1 trillion. It is now the sixth most valuable corporation in the world, significantly more valuable than rivals with greater valuations like Toyota Motor Corporation and Mercedes-Benz Group AG, and it has made its CEO, Elon Musk, the richest person in the world. Nevertheless, Tesla's grade has been gradually raised by S&P and Moody's. S&P upgraded it to BB+ in October, which is one notch below investment grade. Following suit in January, Moody's raised Tesla 2 spots to the same rank on the basis of growing profitability and possibilities for business scale. Nishit Madlani, head of S&P's North American auto sector ratings, stated that despite supply chain constraints, Tesla is expected to overcome its junk rating this year. Madlani stated, an upgrade is likely this year. During the June 16 Bloomberg Intelligence hosted Autopalooza 5 virtual event. Given that certain mutual funds are barred from making investments in firms with a junk rating, an upgrade would very well result in an increase in Tesla shares. That could be one of the reasons institutional investors currently own a smaller portion of Tesla's stock. Many funds cannot own any equity where the debt is rated below investment grade, stated. Gary Black is the Future Fund's managing partner. He said that a change would make Tesla a blue-chip company. Tesla announced a second quarter profit in its Q2 earnings report that surpassed Wall Street's projections. The firm also said that it will be increasing its capital spending plan over the next 2 years in order to expand production. As the company scales up its manufacturing facilities, and as commodity costs grow, S&P's Madlani has stated that he wants more clarification on what the company's profit margins would look like. Among other things, the rating agency is considering Tesla's software division. We tied all that down to what does this mean for the company's market position, Madlani stated. Rennie Lipsch, senior credit officer at Moody's, states that the ratings agency's primary concerns are whether Tesla can expand its selection of vehicles and keep its competitive advantage globally. At the Autopalooza event, he stated, there's certainly no indication why they would not be able to do so. For the avoidance of doubt, Moody's Investor Service, also known as Moody's, is the name of the company's historical division and the arm of Moody's Corporation that rates bonds. Bonds issued by businesses and governments are the subject of global financial research by Moody's Investor Service. Similar to this, S&P Global Ratings is a part of S&P Global and an American credit rating organization that produces financial research and analysis on stocks, bonds, and commodities. Of the 3 major credit rating agencies, Moody's Investor Service, Fitch Ratings, and S&P is regarded as the largest, saying that Elon Musk, the CEO of Tesla, will repurchase Tesla shares when the company receives its well-earned investment grade upgrade is still a significant jump. Nevertheless, investors are hopeful that Musk would actually repurchase shares within the year, and they can all exhale with ease. If you want to receive updates on Tesla stock, be sure to subscribe to this channel.